everybody. Welcome to State of the Market. We are going live with Mark in 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond. Welcome to the State of the Market show. I am Mark Sebastian. I am your only option. Reminder, we're here every day at 10 a.m. Eastern Time. Folks, we're going to hit on a few things today. We're going to be talking about the bank earnings that just came out. We're going to be talking about CPI, obviously. And then we're going to talk about AI and how AI has started to lead, and Piper's out cutting software out of AI fears. And you have to wonder whether we're at peak software fear. To dive into that question, I'm be joined by our own AI trader, head of income trading, Hans Albrecht, and we're going to take a little bit of a dive into software. But let's begin with just a brief market overview. At the top of the show, the S&P 500 is up 35 points, good for 0.5%. We are back above 6,900. Raise your hand if you thought that the weekend news of a blockade in Iran would lead us within 70 points of an all-time high close and a 100-point rally. Was not on my bingo card either, folks. But as Tim Colby and I were discussing yesterday, the market has moved on from Iran unless there's a major news focus. So you're going to be hearing a little bit less about what's happening in the Middle East from us unless oil makes a wild move. Qs are up about 0.75%. The Dow is up 0.4%. We have the VIX threatening to break underneath 18. Again, not something I would have had my bingo card with a Middle East blockade going on. And oil, for your reference, is down about 3%. WTI WTI in May is back to $93.86 a barrel. The September contract is coming in down about $1.60, getting back below 80. I'd like to see, I'm going to feel much better about oil prices if this number gets towards 75. But WTI not just below 100, but back below 95. That's going to give the market another little additional boost, and why you might be seeing things the way they are. Right now, the path of least resistance is up, but despite this huge rally, there are a lot of stocks that have been absolutely hammered. AI in particular. Again, we're going to be circling back to this in a second and talking about that. Another area that really did take it on the chin is financials. Goldman, who reported Monday morning, had an initial major sell, managed to close the day just, down, and is up today. You can see off the floor, which was below 800, Goldman has rallied about $100, but if you pull out, it is still well below the highs when it was at about $1,000. Now, reporting this morning were JP Morgan. JP Morgan earnings were good, but mixed. Nothing that would make the stock break out, but nothing that's going to absolutely tank the stock either. It's another one where, at the beginning of the year, this was up another 10%. So there could be more upside if the market is going to keep going. The bell of the ball on earnings season so far when it comes to the financials, while my chart loads, is Citigroup. Citigroup beat on top line, beat on bottom line. I am not sure why I'm having trouble getting data out of Citigroup. There we go. Beat on bottom line, beat on top line. And take a look here, folks. You can see JP Morgan still 10% below its highs from January. Citigroup is now above those levels. Citigroup has full on broken out. And then there's Wells Fargo. Stock can't get out of its own way. Beat on revenue, beat on earnings, missed on revenue, and the market does not like this at all. And it was on a nice run. Now it's had a nice bounce off the 21-day moving average. My feeling is if you're looking to play from the long side is wait till tomorrow because this thing could still move around quite a bit. If I'm looking for a bank to try and look at to maybe scoop up here, I'm looking at Goldman and I'm looking at JP Morgan as two names that have potential upside. Neither of those are both of those banks from a long-term perspective, right? We've been talking about private credit. JP Morgan says it feels okay about its exposure. These are the banks that are going to be scooping up those private credit debt issuances at 10 cents on the dollar. If private credit blows apart and they throw these banks out with the bathwater, and private credit probably is going to be the next thing that hits the market. When private credit absolutely implodes, if they take JP Morgan and Citigroup and Goldman down with them, that may be a generational buying opportunity because, again, they're going to be buying those for 10 cents on the dollar. It's going to be a huge win for them. All right. So there's my take on banks. I think if I'm looking to get into one here, I'm again waiting till tomorrow. I don't like to buy the day of earnings. I'm waiting till tomorrow, and I'm taking a hard look at JP Morgan and maybe a look at Goldman Sachs. Wells Fargo, I need to see it get a green. I need to see it get back above the 50 before I'm interested in probably above the 100. Citigroup is a quagmire because you're not used to Citigroup being the leader of banks. It's been horribly run for so long that watching this bank really just fire on all cylinders is a little shocking. Am I right? Yeah. Right? I mean, think about this. Type in one. If I told you a year ago, let's say where it's Easter 2025, and I said, hey, guess what? Citigroup is going to be the best bank in a year. How many of you would have that put it on your bingo card? Type in a 1 if that's one that you would have thought. But I'm going to be taking a look at Citigroup with Alicia in Trade Zone. All right, now, next up on our list, we did get inflation data today. And it was a little bit of a surprise. And this might be part of the reason why you're seeing such strength out of the S&P. Producer Price Index. They were looking for a 1.1% increase. Came in at 0.5%. Core PPI. They were looking at 0.4. It came in at 0.2. And year over year, both pretty much in line, maybe a little bit soft. That inflation data, what does that tell you? One, so far, the gas price changes have not really moved into costs in the way that we would expect. Could be a combination of demand destruction, right? We're paying more for gas, so we're buying fewer Pez dispensers at the CVS. I don't know, whatever. And two, it could be that some of the effects of oil have not kind of made their way in the U.S. economy. Also helps that the United States, we're very WTI focused. We are a net exporter of energy. That's going to give us a little bit of a cushion here. And that's why that inflation data comes in pretty nicely and gives the S&P another lift. I am in 0DTE going into today, knowing we had all this data, I had put our traders into a trade in XSP, which is the mini SPX. We bought the 689 calls and we bought the 688 puts. The 689 calls are trading about $4. Guess what we bought both the call and the put for? Just take a guess. The answer, $3.35. So needless to say, I am sending out an order to sell this at $4. I did put $4 in as my target. So we're going to sell. The way this works is when I have a strangle on, I sell the side that wins, that's worth more than the whole strangle. Then I sit on the other side for a little bit, see if we get a reversal. So my 0DTE traders and our trade to close traders, it is time to take your money on the call side of that strangle. And folks, I don't normally put out alerts, but when we have a trade that is winning and doing really well in the middle of a show, it's my responsibility to get an order, a alert out to our traders. So I apologize for having to write this while we're talking, but I want to make sure people are monetizing their wins, right? A win isn't really a win unless you monetize it. And that is what we are about here at Option Pit. When we get a win, we want to take our money off the table. All right, folks, I have that done. Now, the final story we're taking a look at is AI. And we continue to see AI and AI supportive names starting to kind of take off. And you can see David closed his call at $4. Yeah, a lot of nice wins here that I'm seeing. That makes me very happy. Veritiv Holdings and Intel, some of the other AI names that are really starting to take off. Veritiv, Intel. 2 years ago, when this stock was $19, I had tried a couple of times in Delta Strike. I had tried a couple of times in Delta Strike to trade calls at Intel to no avail. Finally, as I was closing one of those calls, I looked at Delta Strike and I said, I threw my hands up. I said, listen, guys, I know the sum of the pieces are worth more than the parts, and the parts are going to go up in value. So I'm done trying to trade options. And sometimes you have to do this. This is one of the rare times that I go to the stock. When I say, I know the stock's going to turn around, but I just don't know when. That's when I buy the stock. So I said, folks, I'm buying the stock for, $19 or less, and I'm going to hold it. The only thing I'm kicking myself about is that I got out of the rest of my stock at $47 a share. Now, we did a couple of nice Delta Strike trades going along. We've had a nice trade in Project MNS, trading these AI names. Speaking of which, there is the free session starting tomorrow with Alicia, where she's going to be guiding you through the 1 and 0 DTE method, completely free. It's going to be Wednesday, Thursday, Friday at 2 p.m. Eastern time. So it's a great opportunity for you to come and learn and trade with Alicia. but we've seen the AI names really start to do well. Veritev is up 62%. Obviously, Micron's up 32%. Semicap Equipment up a bunch. One AI name that is going to be worth watching reports this week. That's Taiwan Semiconductor. Another one that is reporting this week is AMC. Why can't I remember the name of the stock reporting this week? Not ARM Holdings, but there's another pretty big player in the here, 1 second. I will pull it up. It is not Netflix. Oh, ASML. Thank you. I knew it wasn't ARM. It's ASML. ASML Holdings is another one that's a big facilitator of AI. Those are two names that you can watch this week. And then last, I think Netflix on Thursday is going to be another interesting one to watch. But if you want to see whether this kind of AI narrative is going to continue, you get a pretty big hint as to what's coming between Taiwan Semiconductor, which is a $2 trillion company almost, and ASML, which is worth now, a real decent amount. I think it's $580 billion. So these are going to be two names that I think are going to give you a look at the AI narrative and what it's doing in the markets. Now, one thing we know AI is doing is killing software. Poster child for software, Microsoft, it was $542 on October 28th. It now sits at $390. IGV, software ETF, in October was up at almost 120. It sits at 80. These names have been crushed. And a question I get all the time, Mark, when do I buy some of these names? Which names do I buy? That sound familiar to you guys? I'm sure it does. So what I'd like to do is bring on our own head of income trading and designated AI specialist software, and Hans Albrecht. Hans and I are going to talk about, is it time to take a look at software stocks? Now, Hans is obviously coming to us from the heavens that is the suburbs of Toronto, Canada. Good morning, Hans. You're muted. I mean, I've got him muted right now.
Oh, that's my bad.
Oh, you got me muted? Okay. Good morning, everyone. Good morning, Mark. Yes, coming to you from the Great White North here, where I actually just opened my pool. So we do have pools here. They double as ice rinks much of the year, but it's nice to get the pool open.
Oh, lovely. So Hans, this is the question I keep getting. I see it in the order flow. Traders trying to buy calls on things like IGV or Microsoft or, some of the other Oracle. Oracle had a pretty nice day the last couple of days. They're asking me, okay, Mark, with the obliteration of these names, is it time to start looking to buy?
Yeah, that's the $64 million question right there, right, Mark? So I think the tricky part with software is it's in the midst of a multi-year headwind, right? So what people have to understand is that the big sell-off in software was real, right? That's not a mistake. It's not a big overreaction. It's not, the tariff tantrum and everything just comes back again, or Iran, okay, we're going to sort that out. This is really a big difference between something that's really working out there because of AI, which is, we need more chips, we need more. I mean, we can see there's insatiable compute demand. We're seeing some of the big models sort of throttle demand a little bit because they can't satisfy the demand out there, and we're early innings. right? So that means certain things are going to continue to do well, which I've been talking about. We've been doing in Turbo Income, like, owning copper stocks and glass and stuff and cement. AI can't code a bag of cement. At least not yet. Maybe at some point they'll 3D print it or something, but still, it's real stuff. The software area is very much a kind of area of coding, right? So anything that kind of touches coding is now disruptable, right? So I always like to give the example of the London cab driver. Think of how amazing their IP was, right? Decades of knowledge. They've learned every street, every nook and cranny of the city. That is an incredible amount of skill that allows them to drive a cab, drive one of those London, cab anywhere really. Suddenly Uber comes in, GPS comes in, and now you can move to that city and instantly be a cab driver, right? So you make something very easy for someone to do, and that makes it tough for the incumbent companies. So anybody can code now, right? The market is right to reprice it because we don't know where the revenues are going to be in many cases in 5 years. And that's what makes this really, really tricky.
Yeah. But there are some of these software companies that are kind of moat-like to some degree, right? Microsoft has its hands in just about everything. The operating system you need to run. The operating system is basically intertwined in everything we do, right? Where they're weak is Office, right? That's where they can be attacked because Hans, back in the day, how much Excel spreadsheeting did you do when you were, managing your trades? I know you still use Excel or Google Sheets to keep track of your trades now, right? Like, how big of a part of our trading was Microsoft Excel?
I don't know. I still do my charts by hand with a ruler and pencil and a chalkboard. So I guess I need to get up on the new technologies. You're to Excel. What is that? No. Look, yeah. I agree. And this is where, look, what happens when a category gets slammed like this is it's shoot first, ask questions later, right? We'll use all the stupid sayings, baby out with the bathwater, all that stuff. So you're touching upon some very, very important points. There are still some moats, and some of them are around regulatory barriers, compliance infrastructure, data, sort of having tons of data. Like some of these companies, have decades of data which you can't replicate very easily or at all. And so the idea is that the sell-off isn't wrong. It's that you have to start to sift through. And that's what I've done. And we're going to be looking at maybe doing a kind of event for people to really understand this a little bit more, right? So you want to think of moats that you can't kind of code around. So think of payroll, a company like ADP. It's legal infrastructure. You get that wrong and you're facing, penalties, employee lawsuits. You've got an audit trail. You've got all sorts of crap that's going to happen. You just can't have some dude in the basement vibe code you a version of that's going to help your company. Or even, you take something like, like a ServiceNow, which I started adding to yesterday. This is an operating system for that enterprise workflow that's very ingrained, right? So it's going to be very nuanced.
And ServiceNow is down like 70% since last May. It's been absolutely torched.
It's been torched. Yeah.
It's been absolutely torched. So this is one where you're starting to finally say, okay, enough's enough.
I think it's very interesting, right? So what you have to start doing is figuring out, okay, small, medium businesses and individuals like you and I in our personal lives, it's very easy for us to jump ship and say, well, you know what? I don't need Adobe because now I just, Claude can do everything now. It can create a video, Adobe is in a very, very difficult position from the standpoint of small businesses, individuals, but they are very ingrained in what businesses do, enterprises do. So they do have a very strong connection there. But I think the reality for a lot of these companies is going to be, when it comes time to renegotiating, a lot of clients are going to say, maybe you need to sharpen your pencil because I'm seeing a lot of different options out there. So there's going to be that sort of problem. And so it's very, very nuanced. Now, if you're a company like Path, I was looking at Path the other day, iPath. They're in a terrible position, right? Because what they do is that basically just try to position themselves as, an agentic automation platform. We're going to kind of do a whole bunch of stuff that you don't need to do. Well, that's exactly what Claude does. That's exactly what Gemini does, Codex does, and all those things. So you really have to kind of dig deep. But even there, you guys know I've loved Snowflake for a long time because of that amazing data sort of, data crunching ability. And they have that connection, right? So again, enterprise, is it worth it for enterprise to say, well, we're going to move over here because it's cheaper? Well, it's very risky, right? You have trust issues, you have all this stuff going on. But again, it's probably medium term very defensible because they're so important and you just can't replace them. But longer term, that can be contested a little bit because there are going to be other solutions that come along for a while. So I think there's you can think of things in sort of 3 different tiers, which is basically, the clock is running, you better figure this out, like an Adobe. Or there's a moat that you can't really code around, like an ADP, maybe a few other companies kind of fit that. And then there's kind of a middle layer of, this AI may make things even better for companies like CrowdStrike. What does it do for CrowdStrike? What are we going to see? We're going to see cybersecurity problems and cybercrime and scamming and all this stuff on a level that we've never even imagined with these agentic swarms and all this stuff that's going to happen. So that in effect makes their TAM, their total addressable market, even bigger. So in a sense, for some companies, the moat could be even wider. But man, this is going to be tricky to figure out. And that's why you need OptionPit and people like me and you to help do that.
Yes. So folks, Hans just laid things out, and you need to lay these out in their different categories. Category 1, need to figure it out right now. The moat is shrinking. We're in a drought, and that moat is quickly going into the ground. 2, stable moat, likely stable moat, may have been oversold, but their moat is going to stay still. And then, as Hans said, there's ones that can see an increasing TAM, total addressable market, a widening moat. So what Hans is going to be doing in Turbo Income over the next couple of weeks, he's actually going to be addressing each of these individual moats. This is going to be a special thing that he's going to do within Turbo Income. And in order for you to take advantage of Hans's 3 moats, categorize them, trade them, and run Hans's proprietary MTI over the top of it with his incredible income trading and leaps trading, I'm going to give you $100 off the first 1 month of access to Turbo Income. If you'd like to join Turbo Income, it's normally $199 a month. The annual price is $3,000. The $199 is the monthly trial normally, and then it usually goes to $299. So I'm giving you $100 off the trial price of $199, which normally is $299. I'm going to let you try it for a month for $99. Try it for 2 weeks, and if it's not for you, we will gladly refund your money. So you don't have any risk here. So what I'd like you to do is click the link here in chat. Come and check out Turbo Income for a couple of weeks. I think software is at such a important point in the cycle and where it is, right? We've got the market reapproaching all-time highs, except software. When you have a market like that and you have a absolutely wrecked industry, that creates opportunity, right?
It does. And you know what, Mark?
Yeah.
Sorry to interrupt. The irony of it all is that you have to understand software from the stock market's perspective and from the narrative of is software dead? Of course it's not dead. We're going to see more software than we can shake a stick at. We're going to have 8 million times more software platforms and packages and things like that. Software is absolutely going to be a thing. The question is, how does that work for the incumbents? 20 years of software as a service. They have challenges. Now people can do what we're doing very, very quickly, but also, are we going to sell less seats, right? So CRM, Salesforce, all these companies, they sell seats to people. So companies are going to say, well, I don't need 500 seats. I don't need to pay you $500 a month, 500 times. So they have all these challenges now. And that's what the market cares about because profits are important. Yeah. Is it disappearing? No. but are they going to have margin pressures? Are they going to have to adapt? And that's what's happening here. Is there's a big moment of transition and adapting that we have to really, really pay attention to. And I think it's one of the most exciting things to look at right now, outside of the usual stuff we do in Turbo Income, which is, the stuff you can drop on your toe. We're going to need more of that. So you better be allocated to some of those things as well.
Absolutely. So with the market at highs and software still near those lows, Hans is going to guide us through picking out those names that are in file 2 that maybe got a little oversold, and in a file 3, that category 3, where there may be massive upside because their moat may expand. He's also going to steer you clear of those names that need to, as Hans like to say, figured out right now. You sound like a drill sergeant. What's wrong in here? Why is it a mess? Get this cleaned up right now. So
That's right.
Hans is going to guide you through $99 for the month. Try it for a couple weeks. If you don't like it, I'll give you your money back. But I can promise you, you're going to like it and you're going to learn. So click that link in chat and join Hans here in Turbo Income. Additionally, make sure you're registered for Alicia's event starting Wednesday at 2 p.m., where she's going to guide you through that 1 and 2 day process. Hans, thank you so much for your time and energy and kind of breaking things down into those 3 different categories, those 3 different moat, we call them size of moats, if you will, or types of moats. And folks, take this opportunity to join Hans. $99, that's less than a tank of gas now. So take advantage of that. All right, everybody, we're up against it. Hans, again, thank you for your time. We'll be back tomorrow at 10 a.m. Eastern time. I'll be joined by your own Olivia Voznenko, Voz, at 10 a.m. So make sure to join me live as we look at some charts and talk about the news. I'm Mark Sebastian. I am your only option. I'll see you tomorrow. And thank you, Amin. Have a good one.